Welcome to the cutting edge of the global awakening.
In the councils of government, we must guard against the acquisition of unwarranted influence by the military-industrial complex.
Well, it looks like the North Tower of the World Trade Center has just completely collapsed.
The U.S. dollar's status as the preeminent reserve currency is under attack.
This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America.
You really want the truth? Then just follow the money.
Welcome to Follow the Money Radio, a broadcast dedicated to your personal, spiritual, and financial liberty.
Good morning, folks. Happy Saturday to you and your family. Thanks for joining us, whether you're in the car, listening on the web, or wherever you are. Welcome to Follow the Money Weekly Radio. I am Jay Peroni, certified financial planner, standing in for Jerry Robinson as he's traveling this week. I know I have some very big shoes to fill. On today's show, we'll examine, should you sell in May and go away? We'll also examine some current investment strategies to consider in today's economy. Then we'll be joined by our longtime friend and trusted precious metals advisor, Tom Cloud, to discuss his latest thoughts on metals and asset allocation. We'll also be joined by one of my good friends, Dan Miller, best-selling author of 48 Days to the Work You Love. He'll be talking about his life as an entrepreneur and discussing his latest book, Wisdom Meets Passion, on how generations collide and collaborate. I also have my friend Andy Traub of Take Permission Media Network here to discuss his latest book, The Early to Rise Experience, and how he created over $20,000 of income in less than 90 days as a self-published author. He'll be discussing some of his secrets to self-publishing. You won't want to miss this show. We've got an exciting lineup. Buckle up. Get ready for the ride. We're about to begin an exciting journey this week. As you know, we're living in a very different economy, one that can be dangerous, but also very rewarding if you're positioned properly. This isn't your grandfather's economy. You need to know how to adapt and grab the bull by the horns in order to thrive today. 3.5 years ago, I just walked out of a high-paying job. I was working on Wall Street, working for a very big firm, making, well into the six figures, had everything going for me, a solid, established client base, and for me personally, just was not finding work that I enjoyed. I loved helping and counseling people from a financial perspective and giving them investment advice, but I just got tired of living in the corporate world, wearing a suit every day, getting in front of clients, and, that stuff was fun, but corporate America just kind of drained me. I'd been doing it for almost 15 years, working for Big Brother, telling me where I could go, what I could do, what I could say, and for the longest time, it just really started to wear on me. And I started to lose that passion and that enjoyment that I had once had. I loved getting up and talking to people about their portfolios and asset allocation and how they do their investments. But for me, I really wanted to be able to talk about what was important to my clients, about their faith and their values, and really what was important to them as a family. And I found that in a lot of the marketing, if you took a Christian approach in a very big corporation, it's often not only frowned upon, but it also became a point of almost persecution. That's probably the best way to put it. I'm not saying it was, anything like in Jesus's day where, you were getting physically persecuted, but it just felt like if you tried to do certain things, you had corporate saying, nope, you can't do that, you can't do this, you can't say that. We don't want to talk about faith or politics or anything controversial, but at the same time, if you want to talk about homosexuality, we've got all kinds of marketing and all kinds of tools and PowerPoint presentations. If you want to reach the homosexual community, here you go. You've got all these tools. But if you want to reach the Christian community, you want to talk about faith and values, wait a minute, they're saying that homosexuality is a sin, so you can't market that type of stuff. You can't talk to that Christian group over there because they're very controversial and you might offend some of our clients. And that's really kind of the mantra or the philosophy of a lot of these corporations. And that just didn't sit well with me as a Christian who wanted to be able to talk openly with my clients about their faith and values and be able to market in a way that was both honest to who I was as a person and who I was trying to attract as a client. So a few years ago, I just said enough's enough and started my own company. And it wasn't a smooth journey. I wouldn't say that it was the easiest, going from having a nice, cushy income, walking away from all of that, and essentially starting from scratch. That's what I did. So if you're stuck in a dead-end job, going into that cubicle or going into the office each and every day, and you're just miserable, know that there's hope out there. And in the second half of the show, we're going to examine some skills and some things that you could consider if you're thinking about starting your own business, or maybe you've already started a business and you need a little bit more motivation, or maybe, just maybe, you're looking for that next job. We're going to be talking with a couple of folks, Dan Miller and Andy Traub, that'll really bring some ideas and some strategies that may help you move along in your journey. Before we get started, I wanted to really talk about an important event that's going to be coming up that you really need to pay attention to, because this is probably, in my opinion, going to sell out pretty quickly. Jerry and I are going to be hosting an important webinar on smart money investing, how to profit from stocks in 2013. This is going to take place on Thursday, May 9th from 6 to 7:30 Central Time. This will sell out quickly, and best of all, it's free. So don't miss out on a spot. Go right now to ftmdaily.com/smart money. Again, that's ftmdaily.com/smart money. In this webinar, Jerry and I are going to be providing an up-to-date briefing on the U.S. stock market, along with some of our favorite investment opportunities right now, with the central banks across the world continuing their money presses. They just keep printing money over and over and over. There's heightened global tensions heightening every single day. We're going to give an outlook on U.S. stocks and how you can protect and grow your investment portfolio during these volatile times. We're also going to take a look at some of the latest insights on some individual stocks. We'll give our 5 favorite stocks in the next 30 days. We'll give a general forecast of our favorite sectors and industry groups, and then we'll also explain the brand new FTM Market Conditions Indicator. Red means sell, yellow means cautious, and green means buy. But what do these mean for you as an investor in your portfolio? Plus, in this webinar, we'll also have a major announcement on several new stock trading services that are being developed by Jerry and myself. You'll learn about our joint venture to deliver you some of the best investment ideas, resources, and tools to help you beat the market. So don't miss out. Go to ftmdaily.com/smart money right now before it sells out. Again, it's free, so don't wait, as seating is limited, and it's going to be live on Thursday, May 9th from 6 to 7:30 Central Time. So don't wait another second. Again, one more time, it's ftmdaily.com/smart money. Okay, now that we've got the housekeeping done, let's move on to one of my favorite topics, which is investing. I really love stocks. If you've listened to the show for any period of time, you know that each week I come on and I provide a stock idea of the week. Do I randomly pick a company and just come on and talk about it? No, I do a ton of research and bring some of my very best investment ideas for the current markets. Now, let me ask you a question. Speaking of the markets and your philosophies, are you at all a superstitious person? I mean, search the web for some of the most popular superstitions, and you're going to see some very random things. Some of the ones that caught my attention this week as I was doing a little bit of research and homework for the show is just doing a web search saying, okay, what are some of the most popular superstitions out there? And I found some funny ones. In Sweden, collect 7 or 9 different flowers on Midsummer Eve and place them under your pillow, and it is said you will dream of your future spouse. I mean, come on, is that really going to happen? What about this one? If you catch a fallen leaf on the first day of autumn, you'll not catch a cold all winter. So all you got to do is go out on the first day of autumn and try to catch that leaf, so that way there you don't get any colds. I mean, come on, who believes this stuff, right? Number 3 here, another one that I found was many believe that if all of the candles on a birthday cake are blown out with one breath while making a silent wish, that wish will come true. A wish for a unicorn, right? It's going to come true. Where's that unicorn? What about this one? 2 people breaking a wishbone is said to lead to good luck for the person with the larger piece. What about this one? Speaking of bad luck, it's said that one should always knock on wood Also, knocking when speaking of good luck apparently helps with having good luck. This is an old Celtic tradition related to the belief of wood spirits. So, as you can see in the world, there are so many superstitions. Many people subscribe to these. What about when it comes to the markets and investors? Many of them will look at superstitions as well. And I usually don't subscribe to superstitions with life in general, but there are plenty that spill into the markets as investors try to predict the direction of the market and the economy with a simple bit of data. How about this one for football fans? Have you heard about the Super Bowl theory that if the National Football Conference wins, the stock market will rise? However, if the American Football Conference wins, it's going to drop. I mean, come on. A football game is going to determine what happens in the markets. Well, for the ladies, there's the hemline theory. Financial analysts have long noted that the correlation between how much leg women show during the decade versus stock market returns. Basically, shorter skirts equal higher returns. So ladies, next time you see that guy checking out your legs while you're in the airport, don't worry, he's just doing market research, right? Then for the fellas, there's the men's underwear index. It's one of the most and more surprising economic indexes that gets most attention during economic slumps to the beginning of a recovery. The premise here is that men's underwear is a necessity in normal economic times, and sales remain stable. During the severe downturn, demand for these goods changes as new purchases are deferred. Hence, men's purchasing habits for underwear and that of their spouse on their behalf is thought to be a good indicator of discretionary spending, especially during turnaround periods. Okay, so if men forget to buy underwear, the markets are going to crash? I mean, come on. I mean, who subscribes to these? But these things continue to perpetuate. Then there are also the calendar lovers and haters. Bulls love the January effect. This says buy in January and prices will rise during the month. On the flip side, bears love the month of October. The October effect says that the markets are supposed to go down in October. Both the 1929 and 1987 crashes occurred in October, leaving most investors to believe that this month is forever tainted. The truth, however, is that September is actually the worst performing month as indicated by the Stock Trader's Almanac. Then there's the popular sell in May and go away. Wait a minute. Did that say May? Let me check my calendar right now. Oh my gosh, it says Saturday, May 4th. Did I miss the memo to sell everything on May 1st? Sell in May, go away. Does this stock market cliche have any credibility here in 2013? Well, there's an old stock market adage that says that spring is best for profit taking, or at least a time to reduce your exposure to equities. In the classic market psychology, you sell in May and go away with the belief that stock prices will plateau or retreat in spring and summer. Then you return to stocks in the fall, taking advantage of bargains and factors that will encourage a hot fourth quarter. In the last several years, we've seen all kinds of stock market behavior, some of it extraordinary. So is there any credibility to this approach right now? The argument for going away, there's some recent sell in May evidence. Now, if you sold in May of 2009 and went away until November that year, you would have missed out on 18.7% gains in the S&P 500, which was about 80% of the market's gains that year. But every year since 2009, the adage has held fairly true. From November 2009 to April 2010, the market was up 14.5%, whereas in May of 2010 to October 2010, you saw a decline of 0.3%. From November of 2010 to April 2011, we saw a 15.4% gain. This was followed May 2011 to October 2011 with an 8.1% decline. Then if we looked at November 2011 to April 2012, we saw a 11.5% gain, followed by from May 2012 to October 2012, a gain of just 1%. So it has held fairly true from 2009 until present that if you sold in May and went away, it actually worked out for you. But if we open up a historical window, specifically the Stock Trader's Almanac back to 1926, we see the S&P 500 rising 4.3% on average during May to October and gaining an average of 7.1% from November to April. So the historical window also supports the sell in May and go away. While these numbers are pretty compelling, you know what they say about statistics. Is the argument principally flawed? That's the big question. If you do sell in May, where do you put your money after dumping these stocks? The strategy assumes that you know of a better place, an alternative to equities offering greater yield and less risk. Now, even after looking at all of these statistics, and let's say that they could predict what's going to happen in the markets, and we look at historically, yes, we look at from May through October, the returns generally are lower than what we're seeing from November until April, but the numbers are still positive if you look at the historical perspective. And the big question is, okay, you take your money out of the markets, where are you going to put it? You look at the measly interest that you can get in a bank account or in a checking account or a CD, and that really does not provide inflation-protected returns. So at the end of the day, the big question is, where do you put that money? The other big question is, once you're out, when do you get back in? What if mid-October brings a rally? Do you jump in and buy? What if the bears show up at the start of November? How long do you wait for what might be the market low? Moreover, who's to say that the U.S. economic indicators, or even the global ones, might be better than expected this summer? What if corporate profits rise? What if the Fed-induced rally continues? The sell-in-May strategy sounds a lot like market timing. It does have some history supporting it, history that's worth considering. The fact remains that history is no barometer of future stock market performance. There are many stock market superstitions out there. Please don't make investment decisions based on them. The best way to do well in the markets is to learn about stocks and investing, have a solid game plan, be disciplined, and most of all, be patient. Don't invest with emotions. Now, if you're looking to be more cautious, I can certainly see that may be a popular approach. Income securities tend to outperform when the market is flat or in decline. When the markets get bumpy, dividends can act like a buffer and smooth your portfolio's returns. Dividend reinvestment can also help a declining market. When market prices are low, reinvested dividends buy more shares at higher yields. When the market prices are higher, reinvested dividends will buy fewer shares. So if the markets are going down, one of the good things to think about it if you're buying consistently is that you're going to be buying at lower and lower prices, and that's why I'm a strong advocate of dollar cost averaging. I also love dividend stocks. I've developed two strategies that focus on dividends. The first is the all-weather portfolio, which not only invests in dividend-paying stocks, but also commodities, fixed income, currencies, and hedging vehicles to deliver more consistent returns. You've heard a lot about these stocks in the portfolio ideas of the week that I've been putting out the last several weeks. You've heard about solid companies like J.M. Smuckers, Hormel Foods, and Sherwin-Williams, which make up the foundation of the all-weather portfolio that's also combined with fixed income and currencies and other vehicles that can smooth out the ups and downs in the market. The second strategy I've dedicated to dividends is what's called our global income strategy, which focuses in on high-yield stocks, ones paying at least a 3% dividend. Here I'm looking at both foreign and U.S. investment opportunities. In order to find high-quality investments, I look for low volatility and high income. Some of the stocks in this portfolio include companies like Triangle Capital, paying a whopping 8% dividend. I've also got Omega Healthcare Investors paying a 5.7% dividend. And then Enterprise Products, which is paying a 4.4% dividend. The strategy's been one of our best so far here in 2013. It's a solid strategy of, again, finding high-quality stocks that are paying very good dividends. Well, many of our investors also want some growth. That's why I've developed 3 growth strategies. One that focuses on large companies with strong price movements. It's called the Dueling Duos portfolio. Here you'll see large growth companies like Costco, Biogen, Intuitive Surgical, and Ross Stores. It's a strategy looking at larger companies that are reaching their 52-week highs that have the potential to continue going higher and higher. Another strategy called our Contrarian Strategies focuses on mid-sized, innovative companies, the wave of the future, so to speak. Here you'll see companies changing the world around us, companies like electric car manufacturer Tesla Motors changing the way we drive, Green Mountain Coffee changing the way we drink coffee, 3D Systems changing the way we print items with its game-changing 3D printing capabilities. This has been our top performing strategy this year, up nearly 20% as of May 1st. Additionally, I developed a strategy focusing on finding tomorrow's leaders today. It looks for smaller, lesser-known companies that have the ability to deliver big returns. Here you'll see companies like Zillow, SodaStream, Lumber Liquidators, and Cracker Barrel, smaller companies with big profit potential. The bottom line is there are many ways to approach this current market, but you have to have a solid game plan. If you've got an old 401k or maybe even a current 401k and you don't know what to do, maybe you've got an IRA or a Roth or a brokerage account with some stocks and bonds and mutual funds and they're spread out all over the place and you want a second opinion, you want to figure out which direction to take, give me a call. As a certified financial planner professional, I can do a portfolio review, help you make heads or tails of your current positions, and help you map out a strategy going forward. Give me a call at 866-594-9919. Again, 866-594-9919, or you can email me at jay@jayperoni.com. That's JAY@JAYPERONI.com for a free 30-minute consultation. I can help you get going in the right direction. Now, in addition to stocks, I'm also a big fan of precious metals, especially owning physical metals like gold, silver, and palladium. In order to get a lay of the land in the precious metals market, I wanted to bring on one of my trusted friends, Tom Cloud, who has helped many people sort out the metals market, which have been extremely volatile. Let's get Tom on the line so he can shed his insight on exactly what's going on right now in the metals market.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, I want to welcome you to the show, Tom. How are you doing today?
We're doing great, Jay. Everything's been very busy the last 3 weeks with all this activity.
Yeah, you're one of the biggest people that I trust when it comes to metals. I know you've been serving clients since 1977. It's really been a crazy market. Have you seen a metals market like this in recent years at all? Or
Well, two times, 1980, of course, when there's inflation and high interest rates, and then the last time was the collapse of the U.S. economy in 2008. We saw the next 3 or 4 months, big move to metals when stock market went down 28%. After that drop, gold went up 8% the rest of the year, and that was the only investment that went up for 2008. But we were seeing a lot of lag time with suppliers because of the heavy demand, and that's what we're seeing again now because the physical demand is so heavy that even the refineries, whether it's a U.S. refinery or Canada or anyone, can't keep up with, make it as fast as the orders are coming in.
now, any interesting developments this past week here? Anything new and exciting in the metals market, or is it pretty much the same things going on right now?
Well, it's interesting, Jay. The technical side, if you sit and look at it, neither gold or silver look, like they're getting ready to explode up. And certainly that's been the case during the week as we've seen prices up sharply and down sharply. We've stayed very neutral during the week. But when you're looking at the fundamental side and you see what's going on in the banking system in Switzerland, and then when Canada and New Zealand come out and say basically they're not going to bail out any banks if there's problems, that banks will have to bail in. And, of course, all I'm hearing about, especially from my European clients that are actually caught in the middle, including one big client that over in the Cyprus banking situation, they actually took 60% of his company's money, and he will never get it back. So the big thing we're seeing now is the bail-in, and it's being written about. But the question is, how long is it before it gets to the United States? Will it be months or years? But I think anybody that knows economics knows we have the highest exposure to derivatives than anybody in the world. So certainly at some point, what started in Greece in 2011 and moved over to Cyprus this year and to Switzerland, of all places, where they just took 10% of American depositors' money. I've had 3 clients call. You just got a notice one day the bank just took their money, called a bail-in. They're bailing their problems out by taking depositors' money. So that's going to be the big news, Jay, for the next 24 months, not only abroad, but it's coming to America. It's just when will it get here? That's the question. And with Obama now with his private civilian army we've been hearing about for 4 years actually starting, this is getting incredibly scary.
Yeah, I mean, just watching the bombing news, with what happened in Boston and just all the breakdowns of our civil liberties are just, going out the window. So it is very scary when you look at it, in global terms, and then finally hitting the shores in the United States here as well. It's a very scary world that we're living in right now.
It is. And one other point before we go to the next question is the United States is people, a lot of clients say, well, your premiums have gone up a lot. So the premiums I can't control. That's what U.S. Mint, Canadian Mint, or Austrian Mint charge. I said, we hadn't changed our part of it any. But I said, what you got to realize is we're the cheapest place in the world to buy metals. When you look over in Europe right now, gold is selling at like 15% premiums on things our clients are paying below 6% for. So, right now it's, even though premiums have gone up, we still have the best place in the world to buy precious metals. Yeah,
that's a great point. Now, the big elephant in the room is silver. I mean, it's gotten completely crushed since peaking just below $50 a couple years ago. Will this ever recover, Tom? I mean, I got clients calling me every week about our silver ETFs and some of the positions that we're trying to remain disciplined and trying to, adhere to asset allocation principles, but it's tough seeing those big losses in silver. What are your thoughts on silver?
Well, silver is, because it is a thinly traded market compared to gold, central banks don't buy it. It's classified an industrial/investment metal, where you see palladium and platinum as industrial metals almost completely. I mean, certainly we invest in both of those, but small percentages. But what you have going on with silver is the biggest disconnect between the paper market and the physical market. And when you see all the people backed up 3 and 5 weeks and delivering physical silver, the game is running out. Well, I've mentioned many times on this show that the first metal depleted from the Earth's crust on the old chemistry chart we had in high school is going to be silver. I mean, there's less than 5 or 6 years of known silver supply below ground left on the planet Earth. And when you look at all the electronic uses from the industrial side, as well as investors piling in with the banking crisis, I believe with all my heart, Jay, you're going to see silver go way back, even above the 46, 47. And 2 weeks ago, on the webinar I did with Jerry, we talked about the RSI, the Relative Strength Index. They just given the third biggest buy signal on silver when it got down to 22.38 the week before last. And even during the week, this week, where it's been in the 23s and 24s, it's up 10% since basically that webinar where Jerry and I told people that this is the third best buy signal we've ever seen, where silver got oversold. But silver is one of these that's going to give you headaches going both ways. When it's going down, of course, we have paper losses if we cash out, and when it's going up, people they get aggravated because they don't get in quick enough.
Yeah.
but I will repeat this, and I've said it before. If I had to leave the United States of America tomorrow and you had to put all your eggs in one basket, it wouldn't even be a contest. Silver would be by far, there wouldn't be anything else even in the neighborhood of one. If you could make one investment and couldn't look at it, you couldn't trade it, you couldn't sell it, you're going to come back in 3 years and they're going to hand it back to you, it would be silver. That would be the thing that I would do.
Great advice there. Now, what about gold? I mean, I've seen all these bold predictions, $2,000 an ounce, $5,000, even $10,000. These numbers seem so far away right now. Are they still possible, and why?
Well, certainly when we go back and gold's at $250 and we were forecasting, $1,000 gold back in 2001, and people thought we were crazy. 5 years later, there we were. And what you have now is the central banks are just outside of the Cyprus Bank selling 10 of their 13 tons because the IMF forced them to. There's no central banks selling gold. They're buying, and buying, because everybody in the banking world knows that long term the only thing the world can agree on in price is gold. Not silver, not palladium, not platinum, only gold. That's the only common denominator worldwide. So as Stephen Forbes said in the Forbes magazine in June last year, is no question we're going back to a gold standard. People are jockeying for their position now as central banks are buying gold to have more say-so in the future. So gold will just continue now. Certainly with it down 12.5% for this year, we're in the chance that after 12 years of going up at an average of 17% per year, we could have a loss in this 13th year of this bull market. But there are a lot of things, if you start throwing Israel and Iran and what's going on in Syria, the banking thing is by far the biggest. But the one that's overlooked the most, Jay, that all the major brokerage firms calling about is everybody in the world is worried about a breakdown in the U.S. Treasury bond market. And every time that 30-year Treasury gets up there around 4.1, the powers that be do all they can to knock it down because they know it would trigger a sales by a lot of market timers. And when it does, I mean, the game's over. It's people move out of bonds. Gold is going to be one of the first places they go. I think you'll see real estate also pick up, but you'll see people moving to tangible things. And so I think gold, but to get the numbers you're talking about, it's going to have to be an announcement of some kind of gold standard, or it's going to be the U.S. dollar just going to hell in a handbasket, and it could push gold easily up to that 3,000 to 5,000 range. I don't think it would get to 10, 7, 8, 9, 10 without some kind of change in the world where they were going to tie gold to a currency in some way.
Yeah, and you know, a lot of what I do for my clients, Tom, is, you know, talk a lot about asset allocation, and I know you do some of that with your clients as well. And one of the big questions I get a lot of the time is how much is too much in precious metals, and, you know, kind of what's a minimum that you would suggest, you know, in the current state of the economy? You know, what's, first of all, kind of a, you know, minimum that you would suggest of someone's portfolio? And then, you know, let's say you have a real aggressive person who truly believes in the long-term direction of metals. What's probably the most you would say of put your assets into precious metals?
Well, I think the best way for me to answer that is I deal with so many money managers around the country that I'll just kind of throw out some numbers. And certainly when I talk about a percentage, I'm talking about of investable money, which includes your IRA, 401k, personal investments. I'm not talking about the equity in your house and cars and things like that. But we're seeing numbers that range anywhere from 10 to 50%. And, you know, when you saw the number one money manager in the world up in New York go up to 45% in gold, and it's cut back to 20, and as he said, he'll never be below 20. And the Stalker, the most famous gold trader in the history of the world, who lives in London, that, I mean, his return where gold's gone up 17% a year, he's averaged 39% a year for 12 years. And the Stalker just went back into gold last week when it was at 1340, and he has gone back into gold with about 20% of his clients' money, and he is not back into silver yet. We just got one of my best friends in the business talks to him frequently, and in fact, I'm one of the few people in the world who knows his real name, but I would never reveal it. But certainly, we see people from 10 up to 50. The most common number I see, Jay, is around 20 or 25%.
Okay, good to know. Now, one of the things that I've been hearing a lot more publicity about, and, you know, I know you have and you've spoken about it, is Bitcoin, you know, the digital currency, and seems to be gaining a lot of traction there. You know, how big of a threat is this to the gold story, and where do you see that trend kind of heading?
Well, this one I've always said I won't comment on. I mean, there's so much people can read on the internet. They can read a lot more than I could put on it. Not anything I'm interested in. And when you get into, when we saw Gold Money and run by James Turk, who's one of the finest gentlemen in the history of the industry, but then you look at all the trouble you get into with tax laws in different countries, and I just think this is one of these that's going to end up in problems. I mean, it's just, if you have your account make a car payment as far as the IRS is concerned, that's distributed money.
Yeah.
And it should be 1099. And, of course, all these people that have these kind of monies don't do that. So it's something that on the outside looks good, but the further dig in, it brings up more questions. And I just say to anybody that was going that direction, they should do their homework on the Internet, because there's plenty of information, pro and con, on the Internet for them to look at.
Yeah, that's a good point to make. I just keep getting, all kinds of questions from my clients on it, and there's people doing webinars, and it just seems to be, just a craze right now. And that's the same advice I'm giving: is do your homework, and if it sounds too good to be true, like they say, Tom, it usually is, right?
Well, I had a multi-millionaire pay a lawyer to check into it. I think he told me he spent $9,000, and the guy came back and said, "It's just one of these things, it's got a lot of problems. It's one of these things you just can't pinpoint them all at this point. But when you get into tax issues and all that, it's a very tough thing to look at. But as I said before, everybody should do their own homework and not listen to somebody about that, because there could be ramifications."
Yeah. Good points there. And, just one final question here. One of the things, obviously I do a lot of stock investing, and the questions I'm getting from a lot of investors right now is about miners, gold and silver miners, and they seem to be getting clobbered whether gold and silver prices go up or down. It seems, when gold and silver go up, they go down, and when gold and silver go down, they go down. Do you think we're close to a bottom here with some of these miners, or what's the story there?
Well, it's the same story I've told since 1999. I used to be on boards of miners, and I resigned. And the very reason is investors out there think that because the guy mines gold for a living, if he was mining uranium, it wouldn't be in the news. But because it's gold, and gold is hot, or it's in silver, and silver's hot, they go. But what people don't realize is they're running a company just like anything else. They're giving themselves raises. When money's flying in, they're buying questionable properties. They get into reclamation problems. And I resigned board, and I was making substantial income just going to 2 meetings a year, and I just couldn't look myself in the mirror knowing what I knew. Now, every miner it's not like that, but certainly there are miners out there that when money's just flooding into their account, they've got to spend it. They get a little reckless, but the way I look at it is that's the top of pyramid investment. I don't have a penny in them myself. At this stage of my life, I'm preserving what I've made, and while I think there'll be some home runs hit in the miners over a period of time, I have not owned a single one in 13 years. And I'll stay that way just because I know too much.
There you go. Well, getting it straight from the horse's mouth here with Tom Cloud. Any parting words here on your thoughts on any other metal opportunities or anything else that you'd like to?
I think keep watching, Jay. This is a time to be looking for entry points, not getting out. I can promise them this thing is not even anywhere near a bubble or anywhere near where it's going to go. And this fall of 2013, I think we'll see a huge move in all these metals, and we could do another show on that sometime, some of the things we're looking at. But just watch the banking crisis. It will spread across the world, and just the question is how long, will it take? And we're going to see a lot of that talk, and the words bail in, where a bank's going to take depositors' money, a percentage of it, and the government's not going to do anything about it because the government doesn't want to bail out banks anymore. They can't. They don't have the money without printing it and going deeper in debt. So, you're going to hear a lot about bail in instead of bail out, because countries probably will not do any bailing out of bank accounts.
Well, all right. That was Tom Cloud, folks. Thanks for joining us, Tom. We really appreciate your time, and hope you have a great day.
Same to you, Jay. Always a pleasure.
Always a pleasure. Bye now.
All right, folks, I'm going to head to a break right now. After the break, we're going to talk about creating income in today's economy. I'll have Dan Miller and Andy Traub joining me to discuss their books and how you can increase your income doing what you love. You won't want to miss this. I'll be right back.
Gold, silver, palladium. If you have questions about or are looking to purchase precious metals, there is one name to know and one name to call. Tom Cloud at 1-800-247-2812. You hear Tom every week on Follow the Money Weekly, and gold and silver are an excellent hedge against inflation. Tom Cloud has over 30 years' experience as a precious metals advisor. Don't buy your precious metals through a call center and pay inflated prices. Call Tom Cloud, 1-800-247-2812. And for a limited time, tell Tom you heard it from Jerry Robinson on Follow the Money Weekly and receive free shipping and insurance on your order. That's right. Mention Follow the Money Weekly and your shipping and insurance charges are waived on your precious metals purchase. If you have a question about something you heard on the show, call Tom. And to secure your precious metals investment, call Tom. Your gold guy, Tom Cloud. 1-800-247-2812. That's 1-800-247-2812. You heard it on Follow the Money Weekly.
Are you tired of getting whiplash from the stock market? Is the return of your money more important than getting a return on your money? In these difficult economic times, it's only natural to seek out wise investing counsel. Thanks to a new service called the All-Weather Portfolio Strategy, you'll get real-time access to our service, which only invests in high-quality companies with historically low volatility. Have you ever been caught in the rain without an umbrella or left the house without sunscreen on a hot and humid day? Sometimes the weather catches us by surprise. Just like the weather, the investment markets can also catch us by surprise, and sometimes without warning. There are times when the markets soar and we miss out on gains, or maybe we have too much in the market and suffer a major decline during volatile times. That's why we created the All-Weather Portfolio Strategy. The All-Weather Portfolio is suitable for cautious investors, those with a time horizon of 5 to 7 years, those who are close to or in retirement. The goal of the All-Weather Portfolio is to protect against losses in a down market while still taking advantage of the markets when they rise. With the All-Weather Portfolio service, you'll get 24 hours, 7-day-a-week real-time access to the portfolio. You receive instant buy and sell alerts directly in your email inbox. You'll also get a special 27-page report entitled An Introduction to High-Quality, Low-Volatility Investing, a $47 value. To learn more about the All-Weather Portfolio, go to wallstreetrenegade.com/all-weather. Again, that's wallstreetrenegade.com/all-weather. Welcome back to Follow the Money Weekly. I am your host, Jay Peroni, certified financial planner, sitting in for Jerry Robinson, who's traveling this week. And now we're going to talk about entrepreneurship. I get a lot of questions each week from a lot of my investors and just people inquiring about starting businesses. It seems to be a very hot topic in this economy, with people losing jobs and being downsized and less hours, and just the real need for people to do something that they've always been called to do. That's really what I'm finding with a lot of people, is that they're sick of that job that they're in. They're sick of going to work each and every day in a job that they hate. And it's just becoming really a different society, where you used to work for 30, 40 years in the same company. You'd get a pension and all kinds of benefits. Then you would retire and you'd live a few years and you'd die. That was kind of the way of life, 30, 40 years ago. And nowadays, people are changing jobs left and right. It's not where you're staying with the same company anymore. And then people get into retirement and they say, hey, man, this is kind of boring. I want to do something a little bit different. I want to start that dream job or that dream business, whatever it may be. They just get to that point where they're saying, enough's enough. Sitting around on the couch, playing golf, traveling. Yeah, that's fun, but there's got to be more to life. And when I was trying to myself decide what was my next chapter in life, where am I going in life, I was sick of working for this corporation that was just draining and just really just bleeding me dry. I just couldn't stand to be there anymore. Even though I loved what I was doing as far as the financial work, the company itself just was not a fun company to work for. And I said, there's got to be more out there. And that's where I just really started to envision. And I read a book called 48 Days to the Work You Love by Dan Miller. And this book was really life-changing for me. It was this book and also Tim Ferriss's 4-Hour Work Week. Sounds like a dream, right? 4-Hour Work Week. These two books just really helped influence my thinking and just kind of think more outside the box. Rather than working for another company, I had the idea of stepping out and starting my own company. And these two books were really influential in my thinking process. And I got to meet Dan and go out to his house in Franklin, Tennessee. So he's been a good friend for the last few years. And right now, Dan is the president of 48 Days. He specializes in creative thinking for essentially increasing personal and business success. That's really what he is. He's a life coach as well as a career coach, and he believes that meaningful work blends our natural skills and abilities, our unique personality traits, and our dreams and passions. Dan is active in helping individuals redirect their careers, evaluate new income sources, and achieve balanced living. He believes that a clear sense of direction can help us become all that God has designed us to be. He's the author of the New York Times best-selling 48 Days to the Work You Love. He also wrote another book called No More Dreaded Mondays. And his latest book, Wisdom Meets Passion, is highly recommended. It's a combination of his life's work with his son Jared. I'm going to talk a little bit about that when I bring him on. But Dan has been a guest on CBS's The Early Show, MSNBC's Hardball with Chris Matthews. He's been on Moody, Midday Connection, and The Dave Ramsey Show. He's spoken at the White House Christian Fellowship. He's in high demand at national conferences speaking on aging and changes in the workplace, as well as speaking on universities and at churches. He has over 130,000 people on his weekly newsletter. His 48 Days podcast, if you don't listen to that podcast, I highly recommend the 48 Days podcast. Consistently ranks in the top 3 under the careers on iTunes. And he also has the 48days.net business community, which is viewed as an example around the world for those seeking to find or create work they love. So without delay, let's get Dan on the line and pick his brain about what it means to be an entrepreneur in today's economy.
Well, Dan, I want to welcome you to Follow the Money Weekly. How are you doing today?
Doing great. It's a beautiful day in Tennessee. Just happy to have all the opportunities we've got.
Absolutely. I just got to say, I love your latest book, Wisdom Meets Passion. I know you wrote it with your son, Jared, who I had a chance to meet a few years ago when I was at one of your events. And the book's a great combination because it combines your old school wisdom that you have, a lot of things that you've learned over your years of career coaching, along with Jared's kind of cutting edge passion. What led you to write a cross-generational book like this?
Well, I can tell you real easily, and Jared was a big part of what initiated that book. And thanks for your comments. It was an amazing experience to write that with Jared, who lives in Nairobi, Kenya, in Africa as we speak. But about 8 years ago, Jared was going to Africa for the very first time. He was drawn to what the Bible calls the least of these, people who are really disadvantaged. Jared's always been drawn to people who need help. And he would sit in front of the TV, like when Michael Jackson was on We Are the World, and just cry as a little kid because he had such compassion for these kids in other parts of the world that didn't have the advantages he had. But when he was going to Africa the first time about 8 years ago, the night before he left, he sent his mom and me an email, and he said, "My fears of inadequacy are almost overwhelming when I think about what I want to do in going to Africa. But my passion exceeds my fears, and I'm going to go." And I thought, wow, if I could capture that kind of passion that gets us past our fear, lack of courage, low self-esteem, the thing that I see holding people back day after day, that would be amazing. So it planted the seed for a book on how do we tap into that kind of passion that releases our very best self and allows us to do extraordinary things. So when I finally formulated the proposal and went to the publisher with that, they said, yes, we want to do this. I knew I wanted to have Jared involved. So Jared doesn't have a history of writing. He's an amazing thinker, but writing was a new experience. So I wrote the manuscript and then sent it to him. And I said, now, Jared, you just go through, and anytime something really resonates with you, you just kind of write your comments, and then I'll make it work as a book, and you see the end result.
Yeah.
He did an amazing job, and Thomas Nelson was kind enough to give us a great design where everything he said was in red.
Yeah, I like that.
So it stands out easily, and it was a fun project.
Yeah, it's a great book, and really just brings the generations together, and I just really like the way that, like you said, you'd say something, and then he'd kind of chime in and really give some of his opinions and what resonated with him. So it's a really great approach, and different from most of the other career kind of seeking books that are out there. So I really did enjoy reading it.
Well, thanks. And we kind of challenged some old assumptions too about money and education and things, but we've gotten a lot of great feedback on that because we did offer different perspectives on some things that we often take for granted.
Yeah. Now, for people not familiar with your background, as an entrepreneur, and that's kind of what we're talking about here is being an entrepreneur in today's economy. But what would you say, how did you really get started as an entrepreneur? It was almost by accident, wasn't it?
Well, it was by accident. There sure wasn't a lot of planning there. But as a little kid growing up on a farm, man, we got up at 5:30 in the morning and milked cows. And in the heat of summer, we were throwing hay bales. And I thought, geez, there's got to be better options than this out there somewhere. Certainly wasn't offered anything by my family. Their background was certainly to continue farming. But somewhere in that environment, Jay, I got a hold of the little Earl Nightingale audio recording, The Strangest Secret. And I heard this gravelly-voiced old man talking about you can change where you are. We become what we think about is the essence of that. That's not a new concept, but, man, that resonated with me. And I thought, could I change the direction of my life as a poor Ohio farm kid if I just control what I allow to go into my mind? And it became a really lifelong foundational principle for me. And I started absorbing books and then listening to the masters of achievement like Napoleon Hill and Earl Nightingale and Norman Vincent Peale and, of course, then Zig Ziglar and others that came along later, Dennis Waitley. And that just planted within me the idea that I could do something different. I could do something extraordinary. I didn't have to just do the normal kind of things. And once I began to have that mindset, I started to see opportunities all around me. And I've always been that way. So the things that are just normal simply don't appeal to me. And I've just found ideas under rocks since I was a kid, just wired that way. I've got to control my tendency to just want to take on too much because there's so many things that would be fun and profitable to pursue.
Yeah, and that's, just an amazing, testimony because you see, I talk to so many people each week and it seems like people are just in what I would call a work coma. It's almost like, when you're driving sometimes and you're just in this zone and you don't even realize you're driving and then finally you arrive at your destination and you don't remember anything. And that's kind of the way that I see a lot of people going through their work day. They go in, they come home and, what happened at work? They don't remember because it was just like every other day.
Oh, word coma. That's a very graphic, painful metaphor.
How do people change that? You talk a lot about, finding meaning and being fully alive in your work. Many of us, aren't being, doing what God has called us to do. How do people change that so that they get there?
Well, you got to break the cycle of that coma that they're in, as you described. And that's not that difficult to do. But people do get trapped in patterns. I worked with a gentleman not too long ago who was given an opportunity when he was kind of in between jobs to come to work at a bank. Well, he knew it wasn't, perfect, but at least it was something, and he could do that for 3 months or so while he kind of figured out what he wanted to do and move on. That was 14 years ago. He's still there. And that's what happens so often when people don't take the initiative. And we know the old adage, good is the enemy of the best. Yeah. And we get trapped in just getting by, and so we don't rock the boat. We assume that anything out there beyond what we're seeing is probably going to be less than what we have. And I'm not sure why we get that mentality. I always figure there's something better around the corner that I haven't even seen yet.
Yeah, definitely.
But I encourage people to break the cycle of sameness. And that may mean drive a different way to work. Read a book that you would not otherwise read. Take a child and walk through the woods. You're going to see things and hear things that you never would have seen or heard otherwise because they point them out. Go someplace different on vacation. Go to a seminar or concert that you would not otherwise go to. The thing is, even when we talk about people finding their passion or their calling, a lot of people think that that's going to come to them just serendipitously or they're going to be walking along the road and they're going to have that road to Damascus experience where they get a bolt of lightning.
Yeah.
Well, it usually doesn't happen that way. And it usually doesn't happen from just sitting on a rock somewhere. It usually happens while we're in the game. So get in the game. I did another interview this morning, and the host asked me about kids getting out of college who sometimes don't know what they want to do. Well, I said, we get a lot of calls here at 48 Days about that. Gee, my son or my daughter just graduated from college at 22, still don't know what they want to do. Can you help them? I said, yeah, absolutely. Have them call me in 10 years. And there's always this pregnant pause. And, I said, the experiences you get when you're young and early in your career are part of the clarification process. But do something. Don't just wait until all the lights are green before you leave the house. Don't wait until it's perfectly clear what you're going to be doing 30 years from now. Just get out there. I don't care if it's waiting tables or, working at Taco Bell or mowing grass. Just get in the game. And in doing that, you continue that process of clarification. But the danger then is you get in something, so now you're, are working at Taco Bell, and all of a sudden 5 years pass.
Yeah.
No, that means you weren't thinking.
No.
It means you aren't paying attention to what's going on, because that ought to be a stepping stone to something else.
Yeah, and that's what I see. I think I see a lot of people, they're either the, what I call the someday dude. Someday I'll get to that, or someday I'll, move on in my life and I'll pursue what I love, but that someday never comes. And then you've got the people that, are kind of the cold turkey, where they just, quit what they're doing and start this business, and both can be equally dangerous, the procrastinators and then the jumpers. How do you balance that, that mix there where you're, you have a sort of a plan and a business strategy?
Well, that's a great kind of image you just created there, and there has to be a balance, and there can be between those. The thing that bridges the gap is having a plan. When I talk to somebody who is going to be one of the jumpers, and oftentimes they're really fearful. In general, when I talk to somebody who is talking about fear or anger or disappointment or guilt or depression, I know they're looking back. They're looking at what's already happened. As soon as we start to get clear about what they're moving to, we get boldness, confidence, enthusiasm. All those negative emotions begin to diminish. So what we want is not just to jump ship with no plan and then be overwhelmed, with the fear of not knowing. They'll create a plan. So don't burn any bridges. Don't just quit your job this afternoon, but in the next 30 days, come up with a clear plan. What would it look like if I moved into this arena? If I got a new job, if I bought a different car, moved to a different house, I don't care what the scenario is, but create a clear plan of what you're moving to. But there again, don't get trapped in paralysis by analysis. Don't plan for 7 years. I talk to people who are writing a book. They've been working on it, for 6 years. I'm like, are you serious? Whatever it was you're writing about is obsolete.
Yes,
throw
exactly.
it away and start over. But yeah, have some timeline. Of course, that's why we've used 48 days so effectively for so many years, is because I think that's a reasonable time in which to assess where am I, get the advice and opinion of other people, identify 3 or 4 best options, do a little bit more research, choose one, and act. And I think that relates to pretty much any kind of decision we would need to make.
Yeah, that's great advice, because, you look at today's economy, and I'm sure it's changed quite a bit from when you first started with 48 Days, just between the social media and just the really the way that we interact online, and just really where things have gone. And, I used to say that, people could have passions and make money on it, but not everything was a passion that you could make money on. Do you think today almost any passion that you have that you could, create an income stream around?
Almost, yeah. I really do. I have seen some of the strangest things be developed into real viable businesses. You've been here to our property, Jay.
Yeah,
That out front here we have Aristotle, the carving in a cedar tree. Well, nobody's going to sit down with a college sophomore and say, gee, you need to be a wood carver. But that came as a result of a young lady really kind of getting in touch with her passions, her dreams as a little girl and some things she did with her daddy. And now she is a wood sculptor and gets paid extremely well to do that. But we could take that and think, well, gee, there's no way to do that. Or we look at things like art. There was an art class here on our property this morning, a bunch of lady artists. Well, you know what we hear about artists, starving artists. You can't make any money doing that. You have to do something practical. Well, their art teacher, who's a dear friend of ours, was not here today. She was talking to them via Skype, but she's in Scotland. She went to Scotland because she wanted to experience thin places. Now, in her vernacular, thin places are, in essence, where the supernatural meets the natural. It may come from a visual experience or sound or somebody you meet, and she has no agenda, but she's able to do that because she's very successful with her art. People buy her art, and she makes them want her art. So, I have seen people with artistic, musical skills, craft kind of things that you would normally think, you can't make any money doing that. And yet they've turned it into something extraordinarily successful.
Yeah.
So you could test me on that theory, but I would be the last person in the world to say, no, you can't take that passion and turn it into something. Now, here's kind of a caveat, Jay, and this is important. Sometimes people's passion exceeds their talent. Now, that's a different area. I mean, I see these kids on The Voice or American Idol, and I'm thinking, oh, my gosh, whoever encouraged them to sing? Yes, they want to be, the next Taylor Swift or the next whoever, but they need to do something about making sure their talent catches up with their passion. So there's that component. Raw passion by itself can be very dangerous and very unproductive. That's why, we need that wisdom to shape, direct it, give it meaning. So you need both, but passion's a fun starting place for sure.
Yeah, it certainly is. And I'm so much like you. I used to say, well, there had to be a business model. And, that's kind of where I came from is, you kind of plan it. You have your business plan. You look at your market and you do all this analysis. And, people used to say, well, I'm passionate about sitting in my underwear, watching football and drinking beer. and I used to say you couldn't make money doing that. But in today's economy, I say you could. If you've got a good football blog, you can make some pretty good money.
Well, I have a client who's a delightful guy. His name is Jim Hodges, but several years ago, he was getting out of the military and he had an academic background. And so he assumed that, I'd go back into teaching. Now, he knew teaching had changed. He wasn't really excited about it, knew there were financial ceilings there. One fateful night, out dinner with his wife, she asked him that wonderful question, Jim, what would you do if money were no object? He said, I'd sit around the house all day and read old history books. Well, guess what Jim does today? He sits around the house and reads old history books, but in doing so creates audio products that he sells primarily to homeschoolers. He goes to about 10 homeschooling conventions a year, sells his products. He brings to life these old history stories. He's using books that are in the public domain, so there's no copyright issues or anything, but he brings to life history, and he makes an extremely comfortable six-figure plus income doing that. Wow. So there are some things even like that. You take that guy that wants to watch TV and sit on the couch, just be creative. How can you turn that into an economic model?
Yeah, and that's the final question here, Dan, is how does someone create that financial model? You've got the passion, you've got the interest, you've got the talent, you've got everything going for you, but you can't figure out the way to make money. What would be those first steps for that person that says, got the idea, now I need to bring the money in, show me the money, right?
Absolutely. And that is a stopper for a lot of people. A lot of people today, especially we're seeing in the younger generations, Gen Y, Gen X, people want to change the world. They want to make the world a better place. They want to do something noble or humanitarian or green or godly, whatever. They've got the passion and they have the talent, and they assume, well, I'll just ask people to give me money because I'm doing something worthwhile. I'm like, you got to be kidding me. That's a ridiculous model. That model is dead. Those days are gone. You can't do that. There's too many people holding their hands out. I mean, we have 2 million nonprofit organizations in the United States alone. That's not a good model. Do something creative where you create an economic model. So there's a lot of ways to do that, and we're seeing a rise of terms like social entrepreneurship, ethical capitalism, the B corporations. Those are all organizations that are both doing good and doing well at the same time. So it may be engaging the people you want to serve. So they're doing something, like Jared did in Africa, to have the ladies make the beautiful jewelry, to have interns from Rhode Island School of Design come over and design these beautiful jewelry pieces. The ladies there would make them. They could make as much money as a school teacher makes in that environment. And rather than living on the streets as a prostitute, they could hold their head high, get their self-esteem back, and that the profits from selling those in fashion shows around the world, would pay them enough that they didn't have to continue doing what they were doing. So even in really challenging situations like that, I'm always confident there's a way to create an economic model. It's going to vary from project to project, but that's what I look for. How can we create a real, viable economic model that engages your passion and your talent?
Well, great wisdom there, Dan. I really appreciate you sharing with our audience today. It's always a delight talking to you and getting your insight on various things in the economy, and I just really thank you for your time today.
Well, thanks, Jay. I'm honored to be your guest, and there's no dearth of opportunities out there if we just see things that other people don't see.
And if people want to learn more about you, where would they go?
48days.com is our primary site, lots of resources there, and then 48days.net is our business networking site where people really are finding or creating work that is meaningful and profitable. Free membership site. We've got a lot of people there that are doing some pretty exciting things.
Well, thanks again, Dan. I really appreciate it. You have a great day.
Absolutely. You too, Jay.
Yep. Bye now.
That was Dan Miller, and now I'm going to bring on my good friend Andy Traub. Andy launched in 2011 the Take Permission Media Network to consolidate his podcast, and now he hosts podcasts and helps people create audio products. And in 2013, he published his first book, The Early to Rise Experience, Learn to Rise Early in 30 Days. It sold thousands of copies. He's a self-published author, but he's got a unique story. So I'm going to bring Andy on to share his story with us. Let's get Andy on the line right now.
All right, Andy, I want to welcome you to Follow the Money Weekly. How are you doing today?
I am very, very good, and I am excited to talk to you. We've been friends a long time, and it's fun to talk to someone who gets it, and you get it in a lot of different ways as a father, as a husband, as a friend, and as an entrepreneur. So I'm excited to talk to you today, man. I appreciate having me on.
Yeah, definitely a pleasure. I know we met. I was talking to our good friend Dan Miller earlier.
He was sitting, like next to you, and you made some joke about me driving a Prius. And I was like, who is that? I was like, oh, that's Jay. So I don't drive a Prius. So that's when Priuses were like geeky, and now I would own one. So anyway.
Well, I know when you first started and we first started, kind of talking, you were in a job, I believe it was selling insurance, and you were just miserable. And your life has changed quite a bit over the last few years. Tell me about, how your life changed and what was that kind of light bulb moment or how it all came about that you're now an entrepreneur?
Yeah, well, a job is bad when you're working with arguably your best friend in the world. I mean, my friend Stan, I was working for him. He had like 30 years in the business. He literally, Jay, would go to his files. This is my prospecting. This is what I would have to do. He'd go to his files and say, hey, these people have done a ton of business with me. I'm too busy to call on them. They love me. Call them. I'm like, sweet, So he's giving me great clients. I'm working with one of my best, total freedom, and I still didn't like it.
Wow.
So there's something wrong, and it's not him, and it's not the secretary, and it's not, maybe even the industry. It was me. It just wasn't the right fit for me. So I did go out on my own. I did it really wrong. I didn't get a good client base built up, and then I was sort of a wandering generalization for a while. I just, it's a bad thing when, like every second or third person who follows you on Twitter has the same job as you. You're like, wait a minute, there's a lot of us. This is not good. So, yeah, I did sort of social media consulting, things like that. And just through a series of trial and lots of errors and just trying things, frankly, of just being saying, oh, sure, I can do that, giving myself permission to try things. I found myself in front of a microphone like I am now, hosting shows for people. And now more recently, I've written a book. It's done incredibly well on Amazon. And now I am stepping into a role of helping other people publish their books in the self-publishing world, mostly, frankly, just on the Amazon format because they're the gorilla of self-publishing.
Yeah, so that's quite a journey. I mean, you look at, I was reading your statistics. You self-published a book and you've made over $20,000 in 90 days. I mean, how do you do that? I mean, most authors would love to, sell the number of books you're selling and doing it in a format where it's self-published. I mean, how are you doing it, Andy?
Well, let me be clear, too, because, it's like when I tell people I'm debt-free, they go, well, is that the mortgage, too? Like, everybody wants to know the details, right? So the details of that $21,000 is that I have netted $21,000, okay? Just to be clear. Like, that's not like $21,000 in sales. Who cares about $21,000 in sales if your margin's a penny? I've made 4 cents. But my book sells for $7.99 on Amazon. They keep 30%. I get about $5.50, $5.40 a copy. And so I've sold 4,200 copies or so for about a week. It was on sale for about $4. So the number's a little off if you try to do the math backwards. But basically about 4,200 copies. And it has done really well because of just a couple reasons. And I'll be brief. Is that first is I gave the book away to anyone who wanted it before I launched. So I said, if you get on this list, you get my book free, period. No questions asked, no qualifications. You don't have to leave me a review on Amazon. You don't get like just the first chapter. You get the whole book. But like I would send it out and people are like, do you know this thing has a bunch of like errors in it? I said, yeah, it's like the second version, So I'd have people send it back like, here's 37 errors on this page, And and I was like, okay, thanks. And I'd keep refining it and they helped me pick out a cover. And so I had like 750 people I just gave the book to. And what's funny is after the book really started to kind of do really well, I'd have these people that were part of the launch team come back to me and say, hey, I didn't get the final version of the book. And this is like 2 months later. And I'm like, all right, here it is. Because I want to be like, well, forget it. You had your chance. Yeah. But, I can't find that email where you sent me the final version, whatever. But the point is I started by being generous. And that led to people wanting to reciprocate that generosity. And even though I gave them the book, they bought it anyway. And then they left a review. And the other is that I made the book really easy to consume. If I buy a book, I may or may not read it. I'm literally surrounded by books right now, but very few of them speak to me. By that, I mean because I love audio. Each day of the book, it's a 30 days, habit building book. Each day has the title of that day's passage and then a link, listen to this day's passage or whatever. And you can click on there if you're on an internet connected device. Kindle Fire, iPad, iPhone, so on and so forth. And you can listen to me read that day's passage instead of, right from your device, instead of reading it. In addition, I also give people who buy the book 30 days of email sort of support, and that they get each day emailed them for 30 days. Now, Jay, it's the exact same content that's in day one of the book. They get emailed to them, but it's a different mode of delivery.
Wow. Yeah.
And I equate it to, what was really awesome in 1987, being able to go to a store and they had the latest blockbuster and I could go get it and it was $5 and it was like awesome, right? Mm-hmm. I mean, I didn't have to go to the theater. Think how much money and time I saved. And now as we're talking, I've actually been watching Harry Potter the entire time on my Netflix on my phone. I'm just kidding. I haven't been. But that, that's the mode of delivery is advancing all the time. And so I made my book more interactive, literally. And so people get to hear my voice, hear my tone, hear my intention. And by doing those things and by guest blogging a few places and frankly, just writing a book that helps people, you help me, Jay. And so I tell people about you.
Thank you.
Right.
Thank
Dan
you.
Miller has helped us. So we tell other people about Dan Miller. Right. So if you help people, that will spread your message.
Absolutely.
And that's what's happened. That's what happened in Time 4000.
Yeah, I mean, you deserve the success. I know you've worked hard, Andy, and it's just amazing to see your journey, from the burnt-out salesman to the person who's now passionate each day, getting up and excited to share his message. I mean, if someone's thinking about going this route, and they say that every person has a book with inside of them, but hardly anyone gets out and writes it. What would you say to that person that's saying, someday I'll write a book. I've got this great idea, but someday I'll get to it.
Yeah. All right. Well, you can no longer say, and I'm talking to the person who's listening to me right now, you can no longer, and because you're already published, Jay, so you don't count. You've already figured this out. You can no longer say, I don't know how to do that. You have to say, I don't know how to do that yet. Because, see, God made this thing called YouTube and, the internet that allows us to learn in a way that we never could before. So one of the things that I'm doing is I actually just announced it the other day is on my blog at my website's takepermission.com. And that's part of the answer to your question is about taking permission. Is that I announced that I'm going to be doing 26 posts about self-publishing. And the point of that is simply to communicate how simple self-publishing is now. The obstacles are gone. You don't have to wait to get picked anymore. You don't have to ask for permission. You can take permission. And, I'm also developing a site which will teach people my system, that whole thing where I gave my book away. How did I do that? How did I format my book with the audio inside of it? How did I get 26% of my readers from Kindle to give me their email address? Where the usual percentage is 0.
Yeah.
So now I have permission to follow up with those people and continue to add value to them and tell them about the next book and so on and so forth. How did I deliver all the extra bonuses? Every person who bought the book got the audio version included free. So how did I do all that? Well, so I built this site called theselfpublishingsystem.com, theselfpublishingsystem.com. And that's what I'm doing now. I'm trying to scale it so that I can teach other people how to do this because, frankly, if I charge $500 for the system, and I'm not going to, but let's just say I charge $500 and you end up building a $5 book. Well, Amazon's going to take, $1.50 out of that. So the only question is, a $5 book do you have to sell to get your, $500 back? It's 142 copies of a book. Mm-hmm. How many, you have to sell like 10 a month, or 12 a month? 13 a month, like that's one every 2 days. So my point is, like, if you go, I just really want to have a book out there and I don't care if I sell a ton, but like, listen, it could suck. You could sell like 12 a month and you could still make some decent money. Exactly. I happen to sell more than that, but there's people out there with great stories. And you know how many pages my book is? Answer, nobody cares. Yeah, nobody cares. I mean, that's the great thing. It's like, it's 109, by the way, but like, who cares? It doesn't matter. It's about how much value does it add to you. So you don't have to write 400 pages. I actually would encourage you not to. I'd write 4 100-page books. It's been so eye-opening to break down the barriers, and I want people to know they can write their own book. They can publish their book on their own. And yes, there are some costs involved, but if the whole process costs you $500, you're going to make your money back. I mean, and you've got this thing out there that if you wanted to go speak, if you want to do consulting, if you want to do all different kinds of things on top of the book, you can do that, and now my book is finally going to be in print, 3 months later, because I've probably had 50 people ask me about the print version versus the 4,000 plus that have paid for it on digital. Mm-hmm. So, and the margins aren't as good, but long story short, anybody can publish a book.
Great wisdom there, Andy. I really appreciate you sharing that. If someone wants to pick up your current book, Early to Rise, where would they go?
Well, go to The Gorilla in the Room, and that is Amazon.com. And as of right now, it's only available on the Kindle. But when you do purchase the book, you get the audio version free. And just in a few weeks, when we have the cover finished, you'll be able to get a print-on-demand copy, and that'll be priced at around $10. And you can hold it in your hand in the morning as you drink your coffee.
There you go. And if they want to reach you directly, where's the best place to reach you?
Well, if they want to read some of those posts on self-publishing, they can go to takepermission.com. And if they want to check out my self-publishing system that I'm sharing with people, then they can go to theselfpublishingsystem.com.
Perfect. Well, it's always a pleasure talking with you, Andy. I really appreciate you taking time out of your busy schedule. You're a busy man now with all the radio interviews, so I really appreciate you freeing up some time in your schedule for us today.
Jay, I got time for you, my friend.
All right. Have a great day.
All right.
All right, where's my money? Money. Daily bread.
Follow the Money Weekly presents the Retirement Minute.
Hello, everyone. This is John Burse with this week's Retirement Minute. According to a recent survey by Allianz Life Insurance Company of North America, Baby boomers value guaranteed income in retirement over higher returns. According to the Transition Boomers and Retirement Income Survey, 87% of 1,425 people between the ages of 55 and 65 that were questioned preferred a financial product that guarantees a 4% return over one that has an 8% return with the possibility of losing value in market downturns. This preference for guaranteed income was higher among women, 91% versus 82% of men. It was higher among those with less than $50,000 in annual household income, 92% versus 83% of those with more than $50,000 in income, and higher among those without children at home, 87% versus 79% with children. Despite the boomers' preference for safety, only 25% said they own an annuity, with most saying they don't know much about the product according to the survey. So why is an annuity a good tool for creating income? It is the only financial product that can create an income as long as you are alive, even if you live so long that you have used up your entire asset. So if creating an income for life is important to you, understanding how annuities work is an important part of your financial education that you need to explore. So make sure your financial house is in order by contacting me at 888-914-9909, and I will be more than happy to review your financial situation with you.
Well, that's going to do it for today's show. Again, this is Follow the Money Weekly, and I was your host this week, Jay Peroni, Certified Financial Planner. If you want to reach me, if you've got a question or like to have your portfolio reviewed, you can give me a call at 866-594-9919. Again, that number is 866-594-9919, or you can email me, jay@jayperoni.com. That's jay@jayperoni.com. Hope you have a great day, a great weekend, and Jerry will be back next week. God bless. Have a great day.
The views and opinions expressed by the guests on Follow the Money Weekly do not necessarily represent the views of FTMDaily.com or Makers Group Financial, LLC. Even though these are proven strategies, Jerry Robinson is not a financial advisor, and his guests are not legal or tax advisors. You should always consult a trained financial advisor and or tax advisor before making any financial decisions. John Burrs is a registered representative of and does offer securities through Sycor Securities Incorporated. Lifetime Decisions Management Incorporated is not a subsidiary of nor controlled by Sycor Securities Incorporated.